All right. This is Blade Ace, where I will try to be A to B to the point. Now, what we're looking at today is a couple of trading platforms. And if you're not in the US and you're outside the US, of course, if you're not in the US, what seems to be the most popular platform to trade on and and that I think is probably the best if you're serious about options trading and you want to be able to share information with others when you trade, and you want all functionality available. Is I think a good one is Interactive Brokers, um, or they're known as IBKR. This is IBKR Pro. But just search Interactive Brokers. And one of the good things about Interactive Brokers is they let you trade in your own currency. So if you have a US platform, usually you'll have to move your currency, send your currency over to that US platform. And then your currency is now in US dollars, which means now if you're wanting to move money back and forth, you've got to account for the exchange rate. And as I did in one of my videos, I showed that you can hedge against your dollar if that is a concern for you. And you probably only need to hedge against the amount you're going to withdraw every month to pay your bills. That's all you need to hedge against. But Interactive Brokers will look like this. And the other thing about it that's good is they will let you paper trade. What's paper trade is it's not real trading. It's using real numbers, like all these values, they're real values, but everything you press is all simulated. It's not real. So you'll get given some fake money to trade, and you can click all you like. It's probably a really good way to get started is Interactive Brokers. Open a paper trade account. I think you need to open a actual account before you can get the paper account, but just go through the whole application procedure, and and then you'll get access to the paper trading account. So your screen will look something like this, and let's say you're trading options. You'll go File. Um, I think you go File, or is it New Window? Ah, no, you go New Window. I don't use this one, so but I should have. One thing I did when I first started is I should have paper traded, and I didn't. I just went straight into trading. So I did real life errors. Fortunately, I only, whatever I did in small numbers, small amounts. But and to be honest, there was something about my attitude. Uh, I don't know if it was a cocky attitude or a smart ass attitude or a can't be bothered attitude. It was definitely a dangerous attitude, which was that, I can't be bothered paper trading. I just want to go straight into the real stuff. But I highly recommend if you're starting off, get Interactive Brokers, do do their paper trading. So this your screen will look like this when you first bring up your screen. Then you go new window if you're doing options, and you go option trader, and that brings up then another window, which is like a option trader window, right? And you can resize these windows to suit. Um, Now, if you're serious about option trading, I know there are apps on your phone that you can use or your iPad. I've looked at some of those. Now, the apps, just be aware, a lot of platforms won't have all the functionality. So a lot of the app platforms that you can use, they won't have all the buttons and won't have all the options. They're made more for those apps are made more for people that I want to do basic stuff like buy 100 shares of Apple, sell 100 shares of Apple. But basic buys and sells and basic options, and probably not all options I found, uh, all types of options. So I highly recommend you if you're going to trade options and you really want to know the market, use a proper desktop platform. Um, Interactive Brokers has an app that you can use on your phone, but I would only use that to just have a quick glance at what you've done, check your numbers, check your trades, but not to actually do anything on. It's just something for you to look at, you know, when you're not next to your laptop or your desktop, right? So here we have the options trading window. And if I wanted to, let's say, um, you put the um, you put the stock here, name of the stock. In this case, I'm putting SPX, which is usually the most traded um, stock for options. It's not really a stock; it's an index, right? So here we have S&P 500 index, Chicago Board of Options Exchange. This is the board that actually provides the market for options. It's based in Chicago. So you click that, and then you'll get the S&P 500, right? The top 500 companies, and you'll get the options that you can buy and sell here. So this is the, if you want to sell, this is the bid, $12.10 for the price of 3940, for instance. Or if you're buying, see how it's got buy leg, you can buy the $12.20 option, put option. So this side's puts, right? This side's calls. You'll get to know these charts. And here are the expiries. So here we have the options expiring today. So as a beginner, I think it's a good thing to choose really close expiries so you can see the full gamut of what occurs. So let's say we choose expiring tonight, right? Expiring today. The current price for this index, SPX, S&P 500, the last was 3957, right? Now, if I wanted to sell a put option on this and collect some premium for selling a promise, I would go to just below that, let's say 3950. So here we go, 3950, and I'd probably sell this option here. So click that, and the details come up. So I'm going to sell one, time in force, just for today. If it doesn't happen today, if I don't get in today, then don't worry about it. Type limit. The limit I'm setting for this is, oh, I think that's what I need to put in now. So if the bid's 1510 and the ask is 1550, right? What's between that? Between that is about 20 worth, so 1530. It's about halfway. That should get us in. But you can go closer to 1510 if you want to try and get a bargain, right? Status, accept and continue. Now it's giving me, now when I do this, it's giving me a chart, you see. So the chart here is saying, let's see what this is saying. Order rejected. Like I said, I don't use this platform, but it looks simple enough. And if you're a beginner, I definitely would take the time to get to know this. So you can start with that. Go to options, go to sell or buy an option, put in a short time frame, and then observe what happens as it goes in and as it expires and as it settles, and see what happens to your balance as that goes through. Okay, so that is Interactive Brokers, which is one of the biggest internationally, and you can use your own currency. And you can do paper trading, which means you can make all the errors you like until you get totally familiar and nothing bad will happen. Now, the one that I started on, the platform I started on, and the platform I love, and I probably should not have started on it because they don't offer paper trading. But I did put money in there and I did try, I did practice my trading with very small amounts, and very small stock values, you know. So the stock value might be like $20 a stock or something like that. Now, the platform is called Tastyworks. The reason why I love this platform, now with this one, you would have to send your money to their US account. Um, and So you'd be doing a transfer of currency if you're not in the US, right? Um, Now I'll just change which, you know, if you're looking to trade, and I'm just changing the zoom level here of the screen so you can see more detail. If you're looking to actually take some money that you've earned and you've saved it, and you're looking to put that money in the market and trade it and buy it, and you're not looking to pull it out, because let's say you got 2 or 3 grand. If you're putting 2 or 3 grand in the market, are you looking to pull it out? No, you're not. You're putting the money into the market and you're expecting to grow that money, and you're not going to be pulling it out. You're just going to play with it, practice with it. And so that's why I didn't bother with the paper stuff. I thought, look, I'll put 2 or 3 grand in there and I'll get started with small amounts. I do not recommend that. I seriously recommend the paper trading first. And I think you have an advantage if you get to understand Interactive Brokers. That platform is it's quite a, a vigorous platform. It has so many things. If you get to know that, well, it might be too much for you, but I tell you, if you get to know how to operate that, um, you'll be laughing. You'll be in a good a point of understanding. The reason why I like Tasty, and I'll bring up SPX, is it's just aesthetically pleasing. I mean, look at it. It's just, you know, Interactive Brokers has that old 1980s computer feel about it, you know. Tastyworks, it it just, see how it can move the graph and expand it. It's just an aesthetically pleasing platform, and I've actually put these lines in here before. It's an aesthetically pleasing platform. And so here are my current positions, for instance, right? And if you go to trade, you can see what's happening with each one. For instance, Silvergate. Here I own some stock on Silvergate. So that's the graph. The value of it is at 62, but I'm selling some options down here to bring that down to meet the strike price. But anyway, don't get your head caught up in that too much. But I'm still buying and selling options around um, that stock. And if you look at my chain here, order chains, here I have an option expiring December 2nd, 2 days to go. It's a $29 put, right? I got paid $190 to sell this put, $1.90 per stock, and there's 100 of them. And currently the price is at 25, so looks like when that expires, I'll be owning another 100 stock of SI. Now, here's an interesting thing that you might actually be interested in. Originally, I got SI up here. And this is a good example of why when you own an asset and you sell options around it, you don't have to worry too much about where the stock price is going. Now, SI, I bought it up here, and shortly after buying it, I realized I didn't actually want that. Um, and the thing is, it just kept going down after I bought it. So I just kept buying and selling options around it. And as you can see here, the computer's telling me that my actual cost price is at $62. So originally I bought it at 126. I've managed to bring my cost basis down to $62. But actually, I keep a separate spreadsheet, which I'll bring up in a second. Here we go. So we've got this spreadsheet should show, let's say, no, it doesn't show at the precisely at the moment. But anyway, my calculations actually bring it down closer to 40, right? So as I'm selling options around it, I'm bringing down the cost basis. So even though the stock's plummeting, I'm bringing down the cost basis. Now, this is the great thing. So yeah, okay, it's plummeted, but if the closer I get it down to where it is now, 20, as soon as the stock goes up to 40 or 50 or 60, then I'm going to be start to make bigger returns, not only on the options that I'm selling around it, but I'm going to make bigger returns as it recovers. This is now the reason why this has gone down. It's gone because it's got to do with crypto. Um, they're like a crypto medium or manager or something or other. You can look them up, Silvergate. But as cryptos come down, they've come down as well. So we're all just waiting for the crypto sagas and fraud that's been occurring that's brought down the prices to settle. Once all that, once the markets clean out all the fraud in the crypto markets, then hopefully all the crypto stuff should start to recover. But anyhow, a good example there of not worrying about your asset price when you're selling options around it because you can bring down your cost basis. Now, as you can see, we're talking about the platform. It's visually, aesthetically nice. And here is a put option for, or is it a call? It's a call. This call option is at $50. Currently, it's at 45. So, see this curve here? As time goes by, this curve will go up and it should meet that top line. Now you see that top line, that's my max profit. If you have a look at the top here, it's 1,400. So when it expires, um, I've actually got it expiring in 198 days. Now that's another long story. I'm not going to wait 198 days to get my profits. But you can see that line, as the stock price goes this way, it gets closer to the profit, you see. So if the price were to plummet, I'd get closer to obtaining that profit. And of course, you can close out of that. You don't have to close out of that at 1,400. You can close out of it at $500 profit or $600 profit. But anyway, that's we're talking about strategies now. But when we should be looking at the platform. So here are the positions. For instance, there's the trade, and you can see it graphically. Here is the activity that I've been doing, the selling and buying. This is the chart area. And then I like this tab over here. It's probably not, all you'll be working with is basically your positions, the trade graph. And this is where you set your trades. So for instance, let's say we were going to buy S&P 500. I haven't got anything going on there, but if I wanted to, I could do an option, right? This is your choice, and you'll learn what all of these are. But usually you start with a short put option. So short meaning sell, long meaning buy, a short put option, and you go. And there's your put option. the put option is at 3955. Currently the stock is at 3957, right? Now, it's way up there. Now, you see this line here? This could probably be a good point because usually where it sort of goes up and then goes down, it tends to hover around those points. So you'll see that, for instance, here, this point matches this point and that point, you see, and matches this bottom. So this bottom kind of matches these points. So where it was bottom, only reaching there, coming down, now it was only reaching there, going up, you see. So take note of those points and you'll learn that as you trade. So I think perhaps it doesn't come down to this top. So that's 3893 or 3900, for instance, right? And you could perhaps sell a put at 3900. And then you could adjust your price, and then you'd go review and send, and you'd be receiving 4,930, and you would need 77,000 to place that. Now, don't get put off by that. Remember, this is a stock that's $3,957 per stock. But I'll just show you a quick trick. If you wanted to reduce your risk there, you could buy a call at 39, well, about here, let's say there, 3. Oh, right. You have to make the expiry the same. So make sure they've got the same expiry. There you go. If you're going to trade a big thing like this that's worth a fortune, and you wouldn't have the money to back up, you could do. Now, it should be balanced, but it's not appearing balanced. I wonder why. 15. Anyway, what you could do, just do one of these. One of these is basically what I'm trying to show. It's called a vertical spread. So what we're saying is, so there's the put that you're selling at 3. Oh, now we said we wanted to do it at 3,900, right? So bring it down. Now, hopefully you can see why I like this platform. It's very graphic, very visual, and it's very easy. It's very modern. They built this, I think, 12 years ago. It's got that modern feel to it. So let's say you're selling this put, but you can't afford that infinite risk on this hugely priced stock. So you buy a corresponding call to back you up. Okay, so now your risk is only the difference between 3815 and 3,900 times 100 shares, which is 6 grand. So now your profit could be 2,320 and your risk is 6 grand. But you can reduce that further if you grab this this option here, move it closer to your sell option. Let's move it as close as we can. The closest would be 3. All right, I think that's the closest there. 3,895. So you've got $5 difference between them. All right. Now, of course, that reduces your the premium you collect. All right, it's not as much. But now look at it. Now you've got better control, and this is what I mean about starting small. So now the possible amount to collect is 160. Your risk is 343. You see what I mean? And now we're trading on a highly priced stock, and which is very liquid. You won't have any problem selling and buying. It'll happen instantly. There won't be any delays, no waits. Um, and so the stock price is around here. So we would watch it. And if it came too close to the edge here, um, well, usually as a beginner, the best thing to do, I find, is you'd put this in, and once it goes in, then you would put uh, a sell if it gets to a certain debit amount. But anyway, don't go doing that without being properly taught or properly knowing how to do that, or practicing in a paper account, because it can muck you about if you don't know. But hopefully, we've achieved the point of this. Now, here are some of the trades I've done before. There are some of the ones that have been filled, right? I don't really use much of that. All I really tend to use is look at my positions, do my trade. I definitely look at the chains, order chains, to see. My last one, I sold for $4 and I bought back for $3. So you see, I made $100 on that. You see, I would look at that, and I would look at activity. Have I got anything working? That's pretty much all I'd use. So hopefully that helps. So if you're starting off, and you're not in the US, I definitely recommend Interactive Brokers, even if you are in the US. But even in the US, I would recommend Thinkorswim or Ameritrade. Their Thinkorswim platform has a good paper trading option. Unfortunately, Tastyworks is the prettiest and most aesthetic of them all. It's a joy trading on Tastyworks, I find. I just love it. But you don't have the paper trade option. So I definitely would not do that until you're absolutely sure, or just do very, very tiny amounts. But if you can only afford very tiny amounts, losing $300 could be a lot to you, especially if it's US dollars. So be mindful of that. Hopefully, I've answered some questions, and thanks for watching.